Right, kind of looks like we've got a fair number of people on here, so I guess let's get going. Welcome and thanks to everyone for joining this very first ever term structure AMA. Hopefully it's the first of many to come as the community grows. My name is Nick Donovan, and I'll be moderating today's session as the host. If you're wondering who I am, I'm a former colleague of one of the founders, Jerry. I'm a former colleague of his from Deutsche Bank days, and from a crypto perspective, until recently, I was part of Amber Group. So that's why I'm here. So the format today for this AMA is probably going to be slightly different to a normal AMA, a bit more structured perhaps, as Jerry and Vincent will be, to some extent introducing term structure now that it's come out of stealth mode. So if you kind of bear with us through some of the what questions, maybe it's the right thing to do for Jerry and Vincent to both introduce themselves and talk a little bit about their journeys, how they got here, and how they ended up building term structure. Over to you guys.
Thanks, Nick. Welcome, everyone. My name is Jerry Lee. This is my first AMA. And actually, it's really the first time using, really using Discord, okay, for this MA. Quite excited that we are going out of a stealth mode, and then a little bit nervous. And but anyway, let's have fun. So my background is that I have a 20 bank. It's really a TradFi veteran. I was the head of fixed income and currency for Grenada in the bank, and I decided to retire last year in March. Right. Before my retirement, my responsibility is looking after the trading activities for, particularly for risk management, and of course, including the product development and the governance. Right. The governance, of course, is the most difficult part, and luckily, Nick and I survived, okay, safely. Right, and then. The reason for me to retire is I wanted to make a change for DeFi. Right. This is not a bullshit. It's really the word I'm telling my boss. I was telling my boss that the reason I wanted to leave. Right. It is because that in TradFi, we know that in the debt financial markets, there's three pillars supporting the markets. So one is the money market. Then we have a foreign exchange, and we have a fixed income, right? But just in DeFi, we see there's a money market quite successful, and we see the good exchange, the DEX, also very successful. But there is no fixed income protocol, right? Existence. So that's why I believe this is a kind of like my mission. I want to jump in to do this. So I give everything in the future within the bank, and then I jump here together with Nick and over you guys. Okay, then over to you, Vincent.
Hey. Oh, sorry, I just mute. Okay, so I'm Vincent. 没有声音吗？我这里已经有。Okay, hello, I'm Vincent. I'm the CTO of Term Structure. 有吗？
Yeah, Vincent, we can hear you.
Okay.
Go ahead.
Oh yeah. Sorry, I just thought you can hear me. Okay. I'm Vincent. I'm the CTO of Term Structure. I'm a serial entrepreneur and a full-stack developer. I have 10 years startup experience. 1 year ago, I found that Web3 and DeFi have great potential, so I joined Jerry to build term structure together. The most exciting thing to me is that I can work with many talents in blockchain, software, and finance industry. So I'm thrilled to see our product to be released on mainnet.
Great. Okay, so thanks both for introducing yourselves. Let's get into the questions properly then. So I guess the first one, let's go to you, Jerry. I'll take the quote straight from the website. The website says, term structure is here to make DeFi complete, and essentially by facilitating borrowing and lending with certainty and flexibility. So can you talk to us and tell everyone on the call here, what is term structure? What have you built? What does it mean? I think you're on mute as well.
Okay, so I think before I answer this question, I wanted to. Can you hear me?
Yeah, go ahead.
Okay, so I think before I answer your question, I wanted to check on this Discord, how many of you know what is the term structure? And I think there is a button to raise your hand. Yeah, I think one hand. I think I saw 1, 2, 3, 4. Okay,
yes, not everybody.
Okay, that's good. That's good. Okay. Let me explain a little bit. The phrase term structure coming from TradFi, that means the fixed interest rate, the relationship between fixed interest rate and a time to maturity for bonds. If we plot the data of this relationship, then we will get a curve. The curve, we call it yield curve. Right. So this is what, when we normally talk about the yield curve, that is what it means. So now back to DeFi. So term structure is a protocol that we wanted to build up to recreate the full fixed income markets in DeFi. This is to ensure the value of a term structure of interest rate can be realized and monetized in DeFi and beyond to have the real world impact to our everyday life. So in short, term structure is a DeFi mirror of a full fixed income market in TradFi. So when I say full fixed income market, that means it actually includes 3 sub-markets. So the first one is what we call the primary markets. This is a market for the borrowers and lender to match based on their the willingness to borrow or lend, and through auction process, right? So this auction process is Dutch auction, where normally it's good for the max quantity of fungible items. And then second is the secondary market. That has to be a real-time order book matching, which is a market-driven pricing mechanism, so that the buyer and the seller can trade at the price they want by being a market taker or by being a market maker, by leaving orders on the platform. And then the third one is a repurchase market. We call it a repo market that allows the bond holders or bond token holders to borrow the underlying tokens with the bond token as a collateral. This is to help the bond holders to acquire the liquidity or doing their cash management arrangement or the leverage, right, whenever they need. So this is the full, so-called like the full fixed income market, and we want to build.
Great. Okay.
Thank you, Nick.
So if I could just summarize that, then I kind of see that as being a fixed income DeFi lending protocol consisting of primary auctions, secondary trading, and repo markets. And I'm sure, assuming I've paraphrased that correctly, I'm sure the different components of that will probably come back to in the questions. But anyway, staying with you, Jerry, I guess the obvious follow-on question to that is, why have you built this? What is the gap within the current DeFi infrastructure that you're looking to solve?
Yeah, thanks. As I said, so we wanted to ensure the value of a term structure of interest rate can be realized and monetized in DeFi. So the term structure is so powerful that with the theory of the textbook, we see like interest rate parity and discount factor, that the human being has built up like 90% of the total financial debt instruments. When I say 90%, that means anything that the priced, settled, or trade at a future day is related to term structure, right? Without that, you only have a cash we can do today, right? So this is a foundational infrastructure that we want to build, but we haven't seen it happening in the DeFi market, DeFi world. So we see some people, they are developing or developed so-called the money market protocol, where the people can lend and borrow on the floating rate by block or the interest rate by day. Or we have seen some like automatic market maker pricing for fixed income, where the people can just take it or leave it based on the price shown. There's no way for them to put their bid for auction or put their orders to trade, buy or sell. All right. So you may ask, so what? So without that, we're still good, right? But I may tell you, let's think of this, right? With the successful term structure, then you can actually manage your asset and liability much better, right? Maybe I can take some example. Right? One example is like if we have this the platform for primary market auction as like a asset liability management tool, stablecoin issuer, they can actually turn their current liability into term liability, right, by issuing bonds, right? This is to help the DeFi financial stability, right? So then the other example can be the investor can buy the real asset with forward hedged. The forward will be developed by the term structure, and then this is today we see a lot of people trying to do these real asset products in DeFi, but the DeFi real asset today can be collateral only, right? People still have to take risks at the maturity. When they turn the real asset back to crypto by the prevailing market, you don't know where this crypto price is 1 year later, right? So, and then the third example can be the user can use bond token as a payment in the future, right? When we have some payment in arrears, we can use the bond token to do the payment, right? And because we know the present value is lower than the future value with like a regular positive interest rate environment. So this is a good the payment process or the utilization in real world using DeFi as a service. So there's a lot more application that we can think of once we have a term structure. But I think today the term structure protocol is the starting point.
No, I'm going to push you a bit more on that, Jerry. Go on. I mean, you talked there about term structure being like foundational infrastructure for everything, and you've just given a couple of examples of, you know, sort of the utility of what it could be used for, asset liability management and so on. You know, what from your perspective, the vision, term structure, fast forward in time, term structure is, you know, the place, the venue for you know, for fixed borrowing and lending. It's the yield curve that everyone's using. What products from TradFi does that unlock in the crypto space, in the DeFi ecosystem?
Okay. Actually, it's quite a lot of things, right? So the term structure is more than, or also called like a fixed income protocol. It's more than like fixed rate borrowing and lending, right? But actually, I see most people focus on that, but actually it unlocks a lot of things, right? For example, like I said earlier, that this is a fundamental infrastructure with interest rate parity. We will be able to find a forward price, right? Well, why forward is so important? Right? If you talk to traders or option market makers, they are eager to find out where is the forward market, because forward is so important. Without forward, they won't be able to hedge their option risk. They can only hedge the spot, but the interest rate risk, they leave it open. Without the forward market, they cannot scale up their risk appetite. That's why we need a forward market, right? And then with forward markets, we can build up term futures with maturity date, right? If you look at the TradFi in real world, we don't have perpetual futures, right? But because term futures has all the function perpetual futures provide, plus the hedging function, where you can hedge 3 months, 6 months, 12 months without worrying where is the funding rate could be next 8 hours, right? So with that, then we can create other interest rate swaps or cross-currency swap that we've seen regularly in TradFi. This allowed us to price so-called asset swap. So you can actually swap from one asset to the other asset with like a confirmed yield you would like to take. And then it can be on-chain to on-chain, on-chain to off-chain, off-chain to on-chain, right? So you can do a lot of things. This is like so much flexibility you can imagine. Of course, not mentioning about some basic variety of product like bond options or dual currency token bonds, right? So a lot of things that we can we can think of. It's the full spectrum of the products we can develop. But this is again the starting point.
Yeah, fantastic. Okay, yeah, thank you for that. So coming back from the vision to the sort of the here and now, is the market ready for term structure? I know you've spoken to a lot of market participants over the last few months, as we talked about. So do you see the demand from them?
Yeah, actually, I talk probably more than 50 market participants, right? Including like the traders, market makers, VCs, exchange, right? So many people ask this question: is it too early, or is it too late? Of course, not too late, right? And but the problem is like when should be the right timing, right? 2-3 years later, or Bitcoin price up to double, or like how much like a stable coin issuance in markets, or like a regulatory clarification. So we don't know. But the Web3 is all about innovation and entrepreneurship, right? And the success is all about the timing, vision, and the execution. So we think we have that vision and execution, but the timing that we actually have put some effort into this evaluation. Like for example, like we observed 50% of the Aave token borrowed are actually repaid 30 days after the borrowing date. And then we also observed that in the last 1 year, the total top DeFi protocol, the total value of the borrowed token exceed $250 billion. Right? So we see that demand is there. And then we talk to market makers, we talk to option traders, right? They are in need, urgent to get the forward markets for them to hedge. And we also observed the RWA investment demand is increasing, right? And then we talk to people, and particularly for those institutions or Web3 institutions trying to offer this RWA products, they also have a problem to hedge the 1 year or like a 6 months return, right? So this is I think this is very clear that we see this is a huge target addressable market here. And of course, I want to mention the timing is right because the ZK-rollup we used is matured at this moment, right? 1 year ago, we probably won't be able to do this, right? Because all of this has to be under this like a scalable environment, and being like we must have the like integrity, data availability, right, and privacy, right, for the auction. Right. So everything we have considered, and then by using ZK-rollup, and so market is expecting, and demand is waiting there, right? So it's not about if market is ready or not. It is about if we are ready to execute the plan.
Yeah, totally. I couldn't, when you're talking about the timing there, I couldn't help but think of the Steve Jobs quote. I think it was and I'll get this wrong, but it's something like the market doesn't know what it wants until we show them. And I don't think that's what this is. I think the market does know what it wants. It just hasn't been built until now. So yeah, it's as you said, a huge target.
Totally.
Right. Okay, thanks, Jerry. Let's switch gears slightly, and I'll come to Vincent. Vincent, can you describe a little bit from the technological perspective what term structure is all about, how it's been built, and what the technological advantages are? Yep.
Okay, no problem. Thank you. It is a great question. Our customized ZK-rollup solution, namely zk-True-up, has great technology advantage to provide good user experience, security, and interoperability. For user experience, users don't need to pay gas fee for order book. They can manage their orders anytime without gas fee. zk-True-up is capable to handle bulk orders with low gas fees. And for security, our zk-True-up will verify all transaction data with zk proof to ensure that each transaction is secure and authentic. Manipulation of the transaction data is impossible. Okay, and zk-True-up is also ensure the fairness of the auction, as the order book information is hidden through the auction process until the orders are matched. Also importantly, zk-True-up achieve on-chain data availability, which means that even our server is down, users still can withdraw their asset on layer 1. That is also the magical part of zk-Rollup. User will have no more stressing about rug pulls or censorship. Interoperability with our own zk-Rollup solution, we will make users' interaction with other layer 1 protocols on term structure more easily. We can give users more chances to arbitrage and hedge. If we build our protocol on top of existing zk-Rollup solutions, the convenience of transaction across different protocols will be undermined. In summary, our zk-True-up solution provides significant advantage in terms of user experience, security, and interoperability, which let term structure stand out in the DeFi world.
Brilliant. Thanks, Vincent. And there's so much in there, right? I'm sure some of the questions will come back into this, but you're in there: scalability, cost, privacy, non-custodial, interoperability. There's all kinds of technology things there people can ask questions about. So we'll stay with technology though. And Aaron, I see you've put your camera on, so maybe this is a good time for you to introduce yourself, and then maybe you can come with, can you talk a little bit? And I know we've had some questions in the Discord about this as well. So why have we chosen to build our own customized ZK-rollup? Can you introduce yourself?
Hello, everyone. That's very nice to meet you here. And I'm the blockchain developer in term structure, and we are building our customized ZK-rollup. I don't know how many of you are familiar with the rollup system, but I can actually say that we all know that the scalability of Ethereum is always a big problem, a big challenge, especially in terms of the TPS and the gas fee cost. So, and just as Jerry just said, the term structure is entire fixed income protocol. Sorry, can you?
No, go ahead.
Yeah, the term structure is an entire fixed income protocol that composed of 3 markets, including the primary markets that will include in the periodical backed auction, and the secondary markets with the order book backed system, and the repo market. And the requirements of the high TPS and the low gas fee is very critical for our business, and that's why we need to build our own rollup system to achieve the high TPS and the low gas fee requirements for our user experience that will interact in our platform more smoothly and fastly. Yeah.
Thanks, Aaron.
That's the reason why we built it.
Yeah, but there's different types of rollups, right? Why is ZK-rollup not an optimistic rollup? Or
yeah, Nick, you just asked the very important questions that before we build the ZK-rollup, we have researched on so many different rollup solutions, such as optimistic rollup and the backforward. There are some plasma solutions that to overcome the scalability issue in the Ethereum. And we know that the optimistic rollup, the concept of it is the fraud-proof system. So it is not really secure, such as the security that used in the ZK-rollup, because the security of the ZK-rollup is guaranteed by the valid zero-knowledge proof, and every transaction that in the ZK-rollup system will be proved with the layer 2 circuits and be verified by the layer 1 smart contract. And that's why it is more secure than optimistic rollup, and that's why we choose ZK instead of the optimist. Yeah.
Yeah. And why build your own one rather than using one that's already out there in the market?
Yeah, that's another great question. Yeah, we all know that there's a lot of ZK-rollup system, the layer 2 system like the StarkNet and the zkSync, and some other public layer 2 chains here. But even if the ZK-rollup can compress the transactions together into a batch, and the batch when dropped to the layer 1, the gas fee of each transaction can be lower down, can be reduced. But for every transaction, users still have to pay a little gas fee on each transaction. But in our scenario, the term structure, the target that term structure trade is on the interest rate product, not the spot product, such as in the CX or other DX. So the cost, the cost of the orders and cost of the match is very critical to all of the users that we trade into the fixed rate product that like us. Yeah. So we have to reduce all the transaction fees when user place order or cancel order to manage their positions for their cost reduce. That's why we need to launch our own schedule, fee schedules that can significantly improve the efficient experience of our users. Yeah.
Great. Okay, well, thank you for that. Stay there, just in case people have questions for you. Thank you. Let's, Vincent, let me come back to you. Let's switch over to security. Obviously, for any new protocol, security is a huge question area that people want to know about. So can you talk about the security measures that Term Structure have built into the protocol?
Okay, of course. Thank you. I think that security is our top priority, and we are taking multiple steps to ensure the security of our platform. Basically, the security measures cover 4 categories: smart contracts, our layer 2 system, connection between users' browser and our system, and development practice. I will highlight some key measures in these categories. For example, we are conducting regular audits by reliable firms to identify and fix any potential vulnerabilities in our smart contracts. And we will launch bug bounty program to encourage developers to find weakness in our smart contracts. We will offer reward for those who contribute to improving our security. And in order to find out potential threat immediately, we are building our watchdog system to monitor potential threats. Whenever potential threat is detected, we will be notified immediately. And we adopt many security measures that are also adopted by many big companies like code review, weakness detection, CDN services to ensure the security of our platform. DNS hijacking will direct users to malicious websites, so we will implement DNSSEC to protect our domain name from DNS hijacking, ensuring users always connect to the legitimate site. And to avoid secret key being leaked, we require team members to use DeFi-Llama's latest browser plugin for phishing detection. We also use multi-signature mechanism to manage our wallet. We are doing our best to protect our users. And well, I cannot cover every detail during this AMA, but please know that user security is always our priority. And we are committed to provide a safe and reliable platform for our community.
Vincent, while you're there on security, one of the questions that's in the AMA on Discord, I think you've answered the question about what security you have for data, but they're asking, do you provide insurance to protect information against theft?
Sorry? Oh, okay. Sorry. I just disconnection.
Yeah, sorry. So I said, I think you answered the question around the security of the protocol itself. One of the questions in the AMA question is, do you also provide any insurance, or how do you think about insurance? Is that something now?
Of course, we do provide insurance in our protocol, and of course, we would like to protect the user's asset. So in case some problem happen, we will use the insurance to make compensation. So basically, we do provide many measures to protect our users. And we are discussing the percentage of the insurance in our pool. Yes, so basically it is a direction we will do, definitely. Yeah.
Cool, great, thank you. Well, this was going to be the point where we're going to stop on the sort of the scripted questions, as it were, and now come on to some of the other questions. I've got a bunch of the questions that were pre-submitted, so I can jump around some of those. But just as a reminder, if you do want to add any further live questions, please, if you're on YouTube, post them in there. We've got people watching that. If you're in the Discord, please obviously add them in there in the AMA questions room. We are keeping an eye on those, and I'll try and do my best to ask them. But let's start with a couple that are already there. First one, and I'm not sure who will take this, Jerry or Vincent, but what's the roadmap going forwards? Where are we and what comes next? Who wants to take that?
Yeah, okay. So let me just brief about our timeline and the roadmap. So, okay, so the first thing is that in April, just next week, also that we will submit our code for audit. So we have already chosen two audit company to audit our code, and ABDK and Quantstamp. Then in May, we will roll out our testnet. So then after that, we will host 2 trading games in May and June. So there will be a 1-week session of trading game, and we have a certain plan and like a trading campaign happening. And then we decided to roll out onto net in July or August, also depending on the audit progress. So then in July, August, the mainnet will start with MVP, which is the primary market and the secondary market. And the Ripple will come in September. And then after that, in Q4, so we will provide certain part of variation, including the dual token bonds or bond options through Ripple. And then in the meantime, we were waiting for the volume of our term structure protocol to pick up, and so that we can develop a forward market. And then, so that's from Q4 to next Q1, we will work on the forward and term futures. And then the next year Q1 and Q2, and we will start to move on for the real world asset product.
Great.
That's just a brief roadmap. Yeah.
There's a lot to keep you busy there. So I guess the next obvious to you again, Jerry. I guess the obvious question that people are asking is tokenomics of the governance token. Can you talk to that at the moment, to the extent that you have all the details? Hang on, we can't hear you at the moment. I don't know if you've gone onto mute. Try again. There we go. Come back again. Guess Jerry's just going to reconnect. Vincent, are you there? I'm not sure if you've just lost everybody in the room there. Bear with us 2 seconds.
You know?
There we go. Now I can hear you, Jerry. Go for it.
Okay, good. Thank you. Okay, so the tokenomics. Yes, I think this is also the question that people ask. This is part of the also the go-to-market strategy, that the community is the owner, and then that's including user, developers, partners, and the team. Right. So tokenomics is the must to connect everybody together and to bootstrapping the networks. But we will do the product first. We will focus on the product development, and then first at the later stage after our MVP, I would believe probably 3 to 6 months time, we will think about the right exact timing for tokenomics.
Okay. Yeah. Okay. Perfect. Maybe we can talk about that on the next AMA then, or the one after that. So okay. What other questions have we got? So why did you, and I guess it's for you again, Jerry, why did you guys decide to go with primary auctions in a secondary market instead of AMM, and why peer-to-peer instead of peer-to-pool? So yeah.
Okay. So my 25 years experience mostly in fixed income, and I find it's the most efficient way, and for the market, is to have a market-driven mechanism which on primary market is the auction, secondary market is the order book, right? Because this allows the traders to decide their price if they want to trade or not, right? Automatic market maker is a formula like decided or some with like some parameters preset, and then you don't have a chance to know is that reasonable or not, but you just have a take it or leave it choice, right? So and then you don't even have a if you don't like the price, and you don't even have a chance to place your order. Right? So this is what we want people to make their own decision on their transaction, right? Because it's their own money. And that's why we go with this option and the order book. And thanks to the ZK-rollup technology, so we can do that with scale, scalability, and then with the rollup, which we have an integrity to get the trust and the data availability to make sure that we never own client asset, right, user's asset. And then,
and Jerry, before you go into the second part of it, I'm just tying this in with another question. So on YouTube, someone's asked, this sounds like Aave, but with fixed rates. So obviously, as you come to address peer-to-pool and peer-to-peer, could you also just explain the difference between, say, an Aave and a compound versus what you're building, and sort of differentiate between those so that it's clear why this is very different?
Okay. So I think the first they are still the automatic market maker, so that actually it's like the protocol decide the price, and then you just take it or leave it, right? And the second is that after the primary market, we are building this secondary market, the Ripple market. If you don't like the token price or you don't like the future market movement, you can decide to sell or not, and or if you want to keep it, you can get the funding, right? And then the token has the bond token normally will be able to become the collateral of other protocol, or that you wanted to buy or sell with like a discounted price. And then Aave and compound, they use peer-to-pool, right? So the problem with peer-to-pool is that they are good for exchange. They are good for money market, but they are probably not good for fixed income, right? For example, in Aave, you have 4 billion of deposit from lenders, and then you just lend out 1 billion. The 1 billion guys pay 4%, and the 4 billion guys can only get 1%. Right? There is a capital efficiency on this on the token, right? Interest rate bearing token, but on the fixed income, it's not going to work.
Agreed. Well, I guess we stay with you as well. There's a question on the Discord. I guess how are you thinking about sort of regulatory aspects going forward?
Oh, I believe that is something that we have to embrace sooner or later, right? So right now, I think we've seen these regulators and some commercial banks or investment banks, they are working together for all those like fixed income protocols. They are trying to have a tokenized bond issuance in this coming from DeFi. And then in DeFi world, right, for those like staking or like interest rate bearing tokens or even like a term structure tokens, they are carrying interest rate, and then through this market driven price discovery process, right? So it's coming together. But at the end of the day, I think we still need to work together with regulators and some TradFis, and thinking about how to emerge this regulations, legal framework, custodian process, right, and the permissioned environment set up, right? So, and then at the end of the day, all the spawn token, right, can be used for the payments in arrears, or can be used for like some investment for real world account receivables, right, or bonds, right? So anyway, I believe, right, so sum up this, I believe that we have to be prepared, and whenever it comes, and we just need to adjust ourselves.
Yeah. Okay. Brilliant. Thank you. What are you? Question. I think it was on the Discord as well. What are you seeing as the challenges to growth at the moment? How are you going to build this? I mean, you're effectively building the crypto bond market. What are the challenges here? It's a difficult environment, difficult time. What are you thinking about?
Okay, so I think the challenges comes a few like from different angles, right? So the first one is that the community agreement, right, or this is support, right? So for example, this is just like what I said, this is the new thing, right? We haven't seen it in market. This is a starting point. We are the first one. Some people may think it's not right timing, but we think we should go today, right? So we just needed to get the support from market makers, from our partners, right? Such as like it can be included like a centralized exchange, include the wallet service, include market makers, include even like a custodian banks, right? So or some other like cybersecurity guys, right? Or risk managers, risk profile that we needed to make sure that we have a proper risk management tool to provide to our users. So I believe this is something that we just needed to get the community together. All right. So I think, and the other thing is the education. I think one of the challenges is like just like I asked the question I asked at the beginning, right? How many people heard about the term structure, right? So, and this is just one example, but a lot of things in term structure that the fixed income people don't really understand. We understand currencies, we understand equities that what we trade, like no retailers will be able to trade directly through their brokers. But the bonds, nobody, I mean, in our real life, that we just purchase bonds from banks, from bond funds, from money market funds, and we don't really just to trade bonds our own, right? So I think that's about education that we need to teach, and what's the power of the parity, what's the power of the discount factor that we can leverage.
Yeah, okay. Thank you. I'm conscious of time, so we probably only have one or two more questions, and there's quite a few that are still on the different channels, so we probably won't get to them all. But maybe this is for both Jerry and Vincent. So there's sort of a combination of questions here around how decentralized is term structure. Are there any sort of centralized mechanisms, such as centralized database of logins and so on, or that can be manipulated by humans? And second part of that question, sort of following on, how do you verify login information? Are you using wallet addresses and so on? So I guess the question is, whilst it's DeFi and the actual trading elements are decentralized, what about the sort of the structure around it, the technology around it?
Okay, let me answer the first question first. So for us, that we are decentralized because I think just on a high level that we don't hold users' asset. We just have no chance to control users' asset. Right? So we use ZK-rollup. We of course like we have for the ZK-rollup we have our own so for the layer 2 server to process our auction engine, to process our order book matching. Right? But we have data availability and we have integrity. We roll up all the data like every single hour, so that our users will be able to withdraw their asset anytime they want. And we also have a design of the forced withdrawal function. And then we also have an evacuation mode. Like, for example, if any users they want to force withdraw and we don't react, then it will automatically trigger the execution mode. So everybody can do is just withdraw and nothing we can do, right? So the protocol we see, you can see there, it's open source and you can examine it. So that's why this is DeFi and with ZK knowledge like support.
Okay, and I guess a bit of a follow-on question to that, but slightly tangential. How someone's asking, how do you evaluate the risks of the bonds themselves that are being traded here?
Okay, so the risk of bonds. So basically, there's a carries. One is the token itself. Then the other one is the interest rate. So I would say that the interest rate, it may move up and down, but of course that there's one way is that we can manage the risk by doing this in TradFi world. We can hedge through forward, we can hedge through futures, and then we can hedge through some other proxy assets that we have similar risk. But I would say right now in DeFi, because we really have no such other products exist. So what we can do is we just trying to see if we can bring up the forward market, futures market together. Once we get there, so people will have a different asset classes they can use for hedging and pricing. But today, it's the simple way. The market price will be decided by the users, which is like borrowers, lenders, buyers, and sellers, through this the order book or the auction.
Yeah, okay, that's pretty clear. I guess really the last proper question here, and it's one I really like, because I know we've talked about it before, Jerry, bringing it back into the real world and events that have happened over the last few weeks. What would your comments be on the recent USDC depegging, and what, if term structure had already been fully operational at that point, how could term structure have helped in that situation?
Okay, so this is actually this is something that we have a choice to avoid in TradFi world when we see what happened to Silvergate or what happened to SVB, right? And because they don't like HSBC, right? They're much more I would say prudent by issuing long-dated bonds, right, to turn the part of their current liability into the term liability, which is so-called the non-current liability, right? But I think the situation for the stablecoin issuers, the problem is that their destiny is like their total liability will be current liability, because the token can be redeemed anytime by user, right? So what they should do is they should also try a way to turn the current part of the current liability into term liability through this term structure borrowing process, so that they can just to borrow USDC back and to lock in the USDC, or MakerDAO can lock in this the DAI, right, for 6 months or 1 year, so that they can purchase 6 months US Treasury and sit where in the middle of the night.
Yeah, no, that makes total sense. If only we'd been a few months earlier. But anyway, I did say that was the last question, but there is one more question that's on the Discord chat that's sort of hanging out there that probably needs an answer. Vincent, if you can come back on for this, I think it's a follow-on question to the previous ones. So if your database system goes down or is compromised, will it cause the service to stop? So will term structure stop functioning in that scenario? So obviously a question that needs to be answered. I know.
Okay, no problem. It's a very professional question. So basically, yes, we have a database, of course, and because we have a layer 2 a scaling solution, so we do have a database, centralized database. And basically, we have a main plan to handle the disaster. For example, once our server is done, Jerry had said that we have a data availability. User can withdraw their asset. That's no problem. And secondly, we do have some backup mechanism. For example, we have multiple backup for our database. And also, we have a comprehensive plan to make a duplication of our database. And because, this involves some complicated technology. For example, we use the Merkle tree technology to implement our ZK-rollup. So we should maintain the integrity of our data. So basically, we need to have many snapshots of our database. When something happens, our server is down, or database has some problem, and we will duplicate our database. And the most important is that we have to maintain the integrity of our data. Okay, so in this way, we will protect users' asset and to ensure users' transaction data is consistent between the blockchain and our database. Okay, so basically we have many major to implement this, and we also have something like rehearsal for disaster recovery. Okay, to handle something happen. Yeah.
Okay, perfect. Yeah, we couldn't leave that question unanswered. So
okay.
I think we had to answer that one. I guess at this point, conscious of time, just come back to Jerry. Jerry, do you want to sort of leave everyone with some final comments? This is the first AMA, and also I guess for everyone who's watching, be it on Discord or on YouTube, what would you ask of them? What do you want? What is the call to action for people? What do you need from the community?
Yes. First of all, I would like to say thank you to everyone here today and to stay with us and support us. And I will say the main message here is I want to tell everyone that the fixed income protocol is more than just fixed interest rate borrowing and lending. Right, we aim to build up the interest rate benchmark for particularly for asset liability management, right, in DeFi and across to the real world. So we want to make a DeFi as a service and make a DeFi as a product. So this is a time for the revolution that we will change DeFi and even we will change TradFi landscape as well. So we need the community to work together, and we need your action to support. So please, my assets, contact us if you have any thought, any ideas, any like a partnership. And no matter you are centralized exchange or market makers or option traders or the wallet service provider or dev developer or anything, right? As long as you are the Web3 community members, we are all welcome you to come to work together to make a change in DeFi. Thank you.
Excellent. And just for anyone who does want to get in contact, the Discord channel is open and live. The Twitter handle is live and already posting things. The website has all of the contact details on there. And obviously you can contact Jerry or Vincent directly as well. So yeah, I guess there's nothing left but for me to say thank you to everyone for joining today, and we'll see you on the next AMA. Thank you, everyone. Bye-bye.
Thank you very much.